Fashion chain Next is expected to post another set of disappointing results amid tough trading conditions when it kicks off the Christmas trading updates for the retail sector next week. Citi analysts widely predict the high street retailer to have suffered a downturn in trade, with broker Numis penciling in a 0.5% decline in total sales in the 2 months to Christmas Eve. Other retail sector peers are expected to have similarly struggled, with some issuing profit warnings. It has been another troubling year for Next, with the group seeing a 7.7% plunge in sales across its high street shops in the third quarter. However, its directory arm recorded a 13.2% rise. In March, the group reported its first drop in annual profits since the financial crisis, with a 3.8% fall to £790.2 million. Graham Spooner, investment research analyst at the Share Centre, believes recent data has done nothing to inspire confidence ahead of Wednesday's trading update. The latest news, that footfall on the high street for the Boxing Day sales was lackluster, won't make pleasant reading for investors in Next and other retailers, he said. Data from Springboard suggests footfall in the last trading week before Christmas fell by 7.1% year-on-year, while on Boxing Day it plummeted 5.9%. It comes as the retail sector is hammered by a combination of rising costs linked to the Brexit hit pound and the resultant collapse in consumer confidence. Chief Executive Lord Simon Wolfson, a prominent Leave campaigner, said last month that cautious consumers were only buying as and when they need, as trading remains extremely volatile. Next central profit outlook for the year is £717 million, which would mark a 9% fall on 2016-17. The retailer is the first in line among a long list of sector peers to report on Christmas trading in the coming weeks, with experts predicting that some firms could have to issue profit warnings. Retail analyst Nick Bubb said it would be surprising if nobody has to bring forward their scheduled announcements. Among the bevy of firms reporting figures is AO World, Morrisons, Sainsbury's, Ted Baker, Tesco, Marks and Spencer, John Lewis, Debenhams, ASOS and Dixon's Carphone. Clive Black, of Shore Capital, said, "We continue to highlight that many retailers expected flattish sales, and while there was some evidence of early discounting, there has been limited evidence of panic activity, last seen at Christmas in the height of the financial crisis." We also point out that most retailers have been preparing for a tougher trading environment, manifested in lower stock commitments and adjusted operating schedules. Going into the January reporting season, we expect upgrades and downgrades and some in between.